From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 13th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. This week, there are several significant news events, in particular looking forward into Wednesday and Thursday of this week, and you will want to make note of them on your financial calendars and when they happen in your personal time zone, wherever you are in the world. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USDCHF, the dollar franc. As you can see, there's two different trends that we really want to pay attention to. The black trend line, which was the previous trend line, basically since the beginning of 2017, beginning of January, started at the top of the black trend line and we went down to the bottom into the 9800s. Then beginning late January, early February, we started moving back higher again along the red trend line. What's most important right now is that we are well within the parameters of the uptrend, the red trend line. Even though the past 3 days have gone down, we are still well within the uptrend. We're above the red trend line. We're even above the 100 period simple moving average. So while it went down the last 3 days, I don't want to give up on the uptrend because the parameters of the uptrend are still there. We still see higher lows and higher highs. Let's go ahead and zoom it in one time. Again, along the red trend line, we have higher lows. We just need a new higher high to make it still within the uptrend. So what I'm looking for today, especially since we don't have significant news, we do have the ECB president speaking today at 9:30 a.m. Eastern U.S. time. But other than that, we don't have any other significant news on the calendar for the day today. So if the ECB president doesn't say anything that causes a significant movement, I'm looking for the market to stay above the red trend line, above the 100 period moving average, and potentially start moving back in the direction of the uptrend. In the middle of the week, we have significant news that could change all of that, but for the time being, above 10060.75, the yellow zone, is our baseline support for the day today. And only if it breaks down through that barrier do we look for it to continue to go lower back down into the 1 point, maybe even down towards the parity level, 1.0. That's the yellow line that's way down here. Turning back in the direction of the uptrend, 1.0100 is the bottom of the green zone. Then all the way back up to the orange shaded area. If it makes a challenge of the highest high, we're back into the 1.0145, 1.0160 level is the orange zone. Of course, above that, we'll make a new high. So definitely want to keep your eye on this yellow zone this week. Bounce off it, continues the uptrend, break through it, we start to look for a downtrend for the dollar franc. Let's move it on over to the euro dollar. Similar, yet opposite situation. We have the black trend line was the beginning of January, started moving up, then we started moving back down. We had some congestion over the past couple of weeks. Last week we saw a significant rally higher. We had the some ECB news last week that started the rise, and then a little bit of a sell-off of the US dollar later on in the week continued that rise. Interesting enough is we're challenging the 100 period simple moving average. I want to make note of that because take a look at the black circle the last time we challenged the 100 period moving average. 1, 2, 3, 4, 5 days, settled around it, even got above it and then got back below it. So we were right around that 100 period simple moving average for 5 days up here at the black circle. Here we are again. Friday, challenged. Today, we're just a touch above it inside the green zone. Take a look back here, right here, where the last time we touched this green zone is. Let me get a little circle shape here as well. We put this circle right here around this green shaded area the last time the market was here. And it's a green circle, but right there where the green circle, green colored circle is, we see the market challenging there, but no breakout in reverse. So very interesting. The no breakout above, we'll call it 1.0675 is the top of that green zone. No breakout above it yet, just like the last time. We challenged above it, but no breakout. We're challenging the 100 period moving average, but no breakout again. It's challenging, but no breakout in my opinion. Could in fact see some reversal here and for this to start turning back down in the direction of what was the previous downtrend. Now if it stays above here, we make a new high above the blue zone. Of course we'll look for further movement higher back towards the 1.0800 level, but for the time being we're challenging this green zone. So for the day today, I think we need to, or really this week, I think we need to watch this green zone. Back underneath it, we could begin a fall back down to the pink zone or lower, maybe even a new low being made. If it breaks out above it, 1.0675, we look for it to go higher. So a breakout of this green zone is really going to give us a directional purpose. I do like the fact that we have this big long wick at the top showing us an infusion of sellers and could give us a clue that we're looking for the sellers to come back in and drive it back down again for the euro dollar. Take a turn back over here to the GBPUSD. Some interesting things and dynamics happening this week out of the UK as well, news, and of course we know that the Brexit information continues to loom over this currency pair, but definitely some interesting things happening here as well. Let's go ahead and just zoom it back in here. We see the black trend line. It's been a downtrend. It's been a pattern of a downtrend. But take a look back here where the black circle is. We see 1, 2, 3, 4, 5 days stuck between the purple and the blue zone. I mention that because that's where we are right now, between the purple and the blue zone. Last week we found support at the blue zone. Right now we're challenging the purple zone, but take a look. We saw a couple of challenges above it back here on the left and got back underneath it. So we got to be watching this as a potential resistance because it was back here. So if it finds resistance and starts going back down, we have an idea what to look for. We're at least back down to the blue shaded area or under the blue zone. Of course, as we discussed last week, we look for this to go lower in the direction of the downtrend. Above the purple zone, we know that this orange shaded area, 1.2260, 1.2285 is the orange shaded area. That becomes your next area for resistance if it breaks above 1.2225, the top of the purple zone. Take it down to the 4-hour time frame, and you can just see it's stuck inside that purple shaded area right now. Hasn't really done much of anything today yet, but we're just kind of stuck right inside that purple shaded area. So we need to watch that as a resistance and a potential reversal point to go back down to the blue zone. I don't think you want to buy it right now. I think buying it right now, you're just speculating that's going to continue to go up. There's no real evidence it's going to continue to go up. In fact, if you look at this bigger circle right here and you take a look at the bottom of that bigger circle where it found support there, so we know that historical support can identify resistance 22.25. So again, I don't think you want to buy it unless it opens and closes, breaks out above the purple zone. So at least just right now, I think it either needs to break the purple zone to the top side, then you have confidence it's going to the orange zone, or it reverses, gets back under the purple zone 2200, and we start looking for it to challenge the lows again into the blue zone for the GBP this week. Let's take a turn over to the USDCAD, the dollar Canadian. We look over here, and of course we made a new high, very close to the highest highs, not all the way up into the yellow zone, but very close to it, just like the black and the blue circles back here, very close to it last week. We've made a turn lower. We had some pretty good news out of Canada on Friday that caused us to turn lower. The market didn't really sustain that move and just kind of sitting between the green and the purple zone. We've seen it here before. The blue zone, sorry, green and blue zone. The blue zone, of course, is our current support. We've seen resistance and support along that area before. That is 3420. Down to 1.3400 is the blue shaded area. So that'll be our intraday support right there at the blue shaded area. It's possible that we even look over the week at the purple shaded area. Sorry, the purple shaded area that sits down here into 33.55. But right now, the blue zone is your current area for support. Resistance, 1.3500. That's the green shaded area right at the top of the green zone is your resistance. So right now, that's your resistance. That's your support. Above the green zone, of course, the yellow zone, as we know, is our next resistance. Not too hard to see that on the left-hand side. So what do we do with this today? Let's take it down to the 4-hour time frame. Again, significant news this week could change everything, but for the time being, we'll look for the blue zone to be our support. It was Friday. We'll look for that to be our current support, and then again, if it breaks through there, we'll look for the purple zone to be our support. If it breaks the green zone again, we're back at the yellow shaded area. We may do some work to try and clean these shaded areas up later on today in the trade room. Let's go ahead and move it on over to the USDJPY. First thing I want to point out here on the daily time frame is this blue box here. We have been somewhat in our range, haven't we, for much of 2017 so far. We're going back to the left-hand side of that blue box in January. We've been stuck inside that range. Let's go ahead and zoom it in a little bit now. Blue trend line was a downtrend. Black trend line showing us a current uptrend. It's been moving higher over the past couple of weeks. Last week we saw the market hit the green zone, settle down on the yellow shaded area, find support at the yellow shaded area, and then start moving back up again. We saw it hit the pink zone. Now we're at the green zone. So again, at the green zone is our area, very similar to what happened down here. And I'm going to take this circle right here and let's drag it right here. And so see if I can swing this around a little bit like this. So right here where the black circle is, you can see how it hit the green zone, came down to the yellow zone. The reason I mention that is really what we're seeing happening here at the pink and the green zone, where it hit the pink zone, and now we're back at the green zone. So if I take this blue circle, and I'm going to drag it over here, and we say, hey, if we do something similar to what happened here at the black circle, green zone, yellow zone, bounce higher, pink zone, green zone, it may bounce higher and make a new high if it responds is the pattern of the trend. So we want to make note of that here at the green zone. Only if it breaks the green zone do we begin looking for it to go lower. 4-hour time frame, again, now that we've seen that, we can see it sitting inside the green shaded area. If you look again back down to the yellow zone as your clue of how you might look for the market to respond here, if I take these circles and kind of squeeze them in now to make it look very similar. I'm going to bring this in a little bit here. Again, you see that congestion support at the yellow zone and a bounce higher. That's what I think what we need to watch for today here for the yen is that congestion at the green zone and potential bounce higher towards the pink zone or higher, just like it did right here for the yen. So if I was to put some black arrows here, this is what you're looking for. A break above the green zone, it goes up. A break below the green zone is what we'll look for a further move lower for the US yen this week. Moving over to the AUDUSD, blue trend line uptrend, black trend line is a downtrend. We've seen it moving higher. Let's go ahead and zoom it in. We've seen it moving higher over the past 2 days. By the way, bouncing off the 100 period moving average. Look back here where the black circle is, resistance several days, and then bounce back down, eventually breaking and make a new high. So we know the purple zone is resistance. We even saw that last week right here. So the purple zone is resistance. Not too hard to see that. Black circle and last week. And of course we have the black trend line sitting there as well. So what I would say about that first is don't buy under resistance. It's never a good idea to buy at the higher high or into resistance. The only reason you want to buy it is it breaks through that barrier. So it needs to break 7,600 if you're going to continue to go long and buy the Australian USD. Otherwise, it needs to go back down first before you buy it. Back down to support or above resistance. Otherwise, into resistance becomes a potential short opportunity in the direction of the black trend line. Let's take it down to the 4-hour time frame. And again, look at that black trend line capping along the highs here, and we're into that purple zone. So for the time being, don't buy under the purple zone. If you're going to buy it, you buy it above the purple zone. Otherwise, you potentially are looking for some intraday short opportunities into between 75.85, 7,600 is the purple zone. That becomes your opportunity. Of course, your risk would then be above the purple zone if you decide to go short Australian dollar this week. And lastly, taking it over to the New Zealand dollar, I just am going to point out the two blue boxes. Let's go ahead and zoom it in a little bit. Look to the left-hand side of the chart, way back here on the left, and you can see the blue box. 1, 2, 3, 4 days stuck between the green and the pink shaded area. The reason I point that out is that's where we are now. Blue box on the right-hand side. We found support at the green zone last week, just like on the left-hand side, by the way, and now we're underneath the pink zone. So the pink zone is clearly going to be our resistance for the day today, 69.60, 69.80. Don't buy under the pink zone. Don't buy under resistance. If you're going to buy it, you want to buy it closer to support, don't you? You want to buy it closer to the green shaded area to provide lower risk and higher reward. And the only reason you buy it, if it doesn't go to the green zone, is that it breaks above the pink zone. 69.80 is the top of the pink zone. So pink zone, resistance. Don't buy under it. Buy above it. If it gets above it, opens and closes above it. Otherwise, potential to go short in the direction of the trend from the pink shaded area for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.